Hey guys, good afternoon, everybody. Today is Tuesday, November 14th. Time is 2:04 right now. Our scheduled mentoring session is for 2 o'clock, so I'm a few minutes late. Sorry for the delay. I had a bit of an issue getting this live stream up, but it looks like we are good to go now. So just give me a few moments to finish setting this up, and we'll get started shortly with the session for today. A couple things here to update. Looks good. All right, looks like we are good to go. Let me get this link sent out to you guys here in the premium. And I'll give it a few moments for people to make their way in, of course. Let's get there. There. Nothing's here. All right, let's get a few moments for people to join in, and we will get started shortly. So if you guys have any questions, feel free to put them in the chat. I think for the main focus for today, well, we don't really have a main focus for today. All we're going to do is cover what's current, which would be the momentum pullback scalp and the High Low Scalp V2. So if there's any other questions that you guys have, feel free to put them in the chat, and then we'll cover as much as we can cover for today. So, all right, guys, good afternoon, everybody. Today is Tuesday, November 14th. Our scheduled mentoring sessions for 2 o'clock. Started a little late today. I had an issue getting the live stream up, but looks like we are good to go now. So if you guys have any questions, feel free to put them in the chat. Otherwise, we'll just wait for more people to join in, and then we will get started shortly. Let's get here. Let's post this up over here as well. Hey Dan, how's it going? All right, let me just post this on the social media as well. All right. All right, guys. I guess we'll just get a few more moments for people to make their way. And I know some people are running a little late today. But if you guys have any questions, feel free to put them in the chat. The main thing that we're going to be focusing on today would be the main strategies that we're applying. So that'd be the momentum pullback scalp and the High Low Scalp V2. So it's pretty straightforward. I mean, if there's anything that you guys need help with, anything that you guys need some clarification, if you guys want to see some examples, just let me know. If there's any trade that you guys have been trying and they haven't been working out for you, just let me know and we can analyze them and see what could have been done differently. But for the most part, that's pretty much what our main focus will be for today, unless we have any other questions. Hey, Bamal, how's it going? All right, so let's just go back and we'll first review the momentum pullback scalp. I'll put the criteria up here, and then we will go over some examples. I mean, for the most part, it's a pretty straightforward strategies. There's not really too much to cover, but we'll see if there's anything here that may be of a question. So, all right, I'll put the criteria up here for the strategy. So this is going to be the momentum pullback scalp strategy. And we'll just go back from like whatever the most recent one that happened recently versus, well, these over here. So if you look over here between like 11 and 12, the volatility did die. They pretty much died down completely. So there were actually no entries here, no official entries at least. There were a couple entries that did show up, but they're not necessarily they don't meet all criteria. The main thing is the ATR. So for example, here there was an entry that came up over here around like, we'll say like 11:42, but the ATR was at 7 at that time. So obviously we wouldn't have taken that trade, but the setup here does line up. So like, for example, price pushed up, we had a retracement over here with this red candle. Your pending order would happen right here at the next 10th level. And this would be the setup for the momentum pullback scalp. However, this here wouldn't be an actual entry because the ATR must be above 15 or around 15, and it was not there. It was currently at 8. So even though this strategy did play out right there, you can see it went to full TP. It wouldn't have been counted. I'll see if there's another example here that actually does meet criteria. But it doesn't look like there was anything that happened here after the live session. I think the only one that we had here was one that actually played through during the live, which was it was earlier this morning around this time. Yeah, so right here. So I think this is the one that pretty much all of us took for the most part. Let me go over here. And let's just go over this example right here. So this is an actual example of the strategy. So first you want to identify the direction of momentum. Right here we have a buy signal. This is going to confirm that momentum is going upwards. So we're going to be looking for buys. Second, you want to confirm the trend is matching the direction using the pivots indicator. So in order to confirm that, you want to see that price is above the pivots. The pivots are angling up. And the main pivot that you want to focus on is going to be the red pivot down here. You want to see that the level 4 is below all of the other ones. So with that said, you can see over here that this would be considered a bullish trend using the pivots. So step 1, we confirm the direction of momentum. We had a buy signal, so it's bullish. We have the direction of the pivots here, so the trend is bullish as well. For step 3, you want to confirm that the trend is matching the direction using the trend meter as well. So down here below is the trend meter. When it's green, it means it's bullish. When it's blue, it means it's neutral. And when it's red, it means that it's bearish. So looking at current price over here, we currently have a green trend meter. So we currently have a bullish trend for the trend meter, bullish trend for the pivots, and bullish momentum. For step 4, you want to confirm a directional push in that direction. So we're all looking for buy here. Obviously, price pushed up right here. Step 5, you want to confirm a pullback in the opposite direction. So price pulled up over here and retraced on this red candle. Once you confirm that, you're going to go down to step 6. You want to confirm that the pullback does not close past the momentum signal. The momentum signal is way down here, and the pullback happened up here. So with that said, criteria is met. For the 7th criteria, you want to insert the nearest whole number. So basically any 10th number. Right here, price pulled back below the at 34,879. So the nearest 10th number would be over here at the 70, right? So 34,870. At this point, you have a buy signal pending right here. If you guys remember this entry from this morning's live session, I didn't enter right away. I let price kind of pull back below. As soon as it pulled back right here, I put a buy stop right here so that when it would swing back up, it'd fill my order and go straight to my TP. And that's exactly what happened here. So once you have that set up there, your TP stop loss is going to be 10.25. Once you have it lined up, you let the trade run, and you can see it went straight to full TP right there. And this is the trade that I took this morning during the live session. Here's the markup from that entry. Right there, same entry we took during the live. And here are my profits that I locked in from that trade. So you can see over here, my funded engineer, I locked in about 370. It was a partial. For my FTMO, locked in 530. My second FTMO, I locked in 960 by 1,000. My third FTMO locked in 1,060. You guys can see there was some slippage there because of the market conditions. My funded engineer, second account, 180. Personal account, 118. Second personal account, 150. TFF 600, and my second TFF, same thing, 600. So those are the profits that I locked in off that specific trade. We took that on the live session. And that's pretty much how it lines up. Pretty simple and straightforward, but you know, obviously we make some small variations to it. Technically, you're supposed to enter right away, but for what I did here is I let price pull down, put a pending order, and then I let it shoot up. I probably should just enter right away because by putting that pending order there, I got caught in the wide spread. The spread kind of widened a bit at entry time, and I kind of got stuck in the position, so I had to pull out manually, and that's why I locked in half profit. I was supposed to lock in 2,000 on this trade, but you can see over here, I locked in 1,060. So basically half profit because of the spread. All right, so there goes an example of the momentum pullback scalp. Looks like we have a question here from Vimal. Vimal is asking on the high low V2, how recent high low do we consider? In today's trade, we take a trade not from the immediate one, but from the one before it. So let's go take a look at that. So let's go to this chart over here. I can't remember which entry it was, Vimal, but let me see. I think it's in the spreadsheet. It should be in the spreadsheet. So I'm assuming, let me just go to the screenshot real quick. This was the first one right here. I'm pretty sure you're not talking about this one because this one was the immediate one. So you might be talking about the second one. Chart. The second one was the immediate one as well. So let's see. Yeah, are you talking about a different one besides these two of them all? Because it looks like these both were immediate. There's a higher high right there. The second one, okay. So the second one over here, this one was also at the immediate one as well. I mean, there's two entries that ran alongside each other, but for this one over here, it was the immediate one, and there was another one that happened right after it. So let's just pull that up. This happened over here at 720. There was a lot of entries that came up today, so there might be some confusion there because, you know, they came up multiple times, but you're supposed to take the one that you are supposed to take the immediate one. So the one that happens first. So let's go over here to 720. So, I mean, which one are you referring to, Kamal? Because let me look at that one here. So 726. So here, I'll mark up the entries here. So there's one right here, right? That's the first one we took. That is the immediate one right there. The second one was right here. Or the second one was right here, actually. Here. So there's no entry right here on this one. Let me see which one you're referring to. How recent high low. So we couldn't have taken this one here because it never came down to this point, I believe. Yeah. So I think that's kind of where the confusion, where you kind of got confused with them all, because there was nothing that happened right here. So see how price never came down to this area? This level was never used. The only time where they kind of conflict is when they cross at the same time. So say, for example, we have two levels right here, right? Say you have one big green candle, like say this is a big green candle and it crosses between both. If that happens, then you take the first one. But this one didn't cross between both. It only crossed between this one right here. So these are two separate entries. There's one entry right here. This is the one that we identified first. And this is the second entry right here. Does that make sense? Because these are, they're two different entries there. This one over here never got filled. See? So this candle right here broke past it. 1, 2, 3, 4, 5. 5 candles had passed. This one was pretty much, it never came up. So this here would be disregarded. Since you disregard that one, this one would, they're two separate entries. So you wouldn't bunch these together as one. You'd only bunch it together if they crossed off the same candle. So let me see if there's an example here, because that's kind of what was happening, you know, over the past couple of weeks because of the ranging market. But today the market was actually moving directional. Okay, so here's an example of like what I mean by that. So like, for example, right here, I know this isn't a good example because there's no trend right here, but see how there's two levels right here? And you see how this green candle breaks past both of them? So if you get a big candle like that, then yeah, you're going to disregard the second one because this is the first one, it's the immediate one. That's when you would look for this one to get retested. So you see how price comes down and then you pretty much look for this one to be crossed back up. But for the example that you're referring to, they're two separate entries. So you have one entry here, you have one entry here. This one doesn't get, it never fills, so it never satisfies the criteria. And this one's different because this one gets broken by a different candle. Does that make sense, Pamo? I want to make sure that you're getting it, because I know I can understand how that can be kind of confusing, but that's the main difference. It's when two highs get hit with a big candle, but this one right here they were separate. So one entry there, one entry there, and one entry there. But yeah, you're right. You are on the right track that you are supposed to take the immediate one. But for this specific example here, or for the entry that came up today, this one over here just was never used. So pretty much that was disregarded. And these two were the entries that came up. I think there was even another one that came up over here. Yeah, there's actually three. So there's one here. This is the first one, I believe. And then, so that's the first one right there. Here is the second one. Price broke below, came back above right there. That one also hit. And then there was a third one that happened right here. Price came above, came back below, and filled right there as well. So basically 3 back-to-back entries right there. There might be another one here as well. Yeah. So yeah, it's clear once you like can see that they're like different entries, but there's like one right there, one right there, one right there, and then I think there's another one that was right here as well. Price broke above it, came back below, and then again another entry right there. Let's see. There was just a lot of entries that came up today. And then again right there, I think this also hit, or I don't know if it did or not. Yeah. There was a lot of entries. So there's one right there. And then there's a whole bunch. If you kept trading, price came back below. This one never came back to fill. So this one would not be an entry. This one over here never came back. So there's no entry there. And then there's actually another entry right here. Price came below, swung below, came back up right here. So there was a lot of entries that came up. So this is what I was talking about during the live session, guys. Like, you know, you just have to be patient and be disciplined to wait for the entries to come, because they're going to come. Like, you know, the past 2 weeks, we didn't have any entries, but today there were about like 1, 2, 3, 4, 5 entries here. And then probably another one right here. Let me see if it comes down. It doesn't. There's no entry there. And this is pretty much throughout the session. I mean, it happened like all day. There's nothing there off that one because it never came back to break it. And obviously we wouldn't be trading anymore around this area. It's too far into the past 8 o'clock. But yeah, guys, here's an example of the entries that came up today. We'll go over the first one over here, and then we'll just go through all of them because they're pretty much the same thing. It's the same setup. So looking at this specific criteria right here, or this specific example, this is the first one that we identified during the live session. This is a high-low scalp V2. This strategy is a lot easier than the momentum pullback scalp. They're both good strategies. This one seems like it's more complicated because there's so much more criteria to look at. But I think once you apply it enough times, it's actually really simple, because you're just like what I did with the criteria here is I broke it down to each step. So it seems like there's a lot of steps here, but realistically, it's not that complicated. It's really just because you could bunch a lot of these steps together. So let's look at the momentum pullback scalp. So I mean, for the most part, the trend for 2 and 3, this is pretty simple. You just need to make sure that it's trending, right? So like 2 and 3 is pretty much the same criteria. First step is pretty simple too. You just need to look for the most recent momentum signal, pull back, and then enter at the next level. So if this is any confusion to anybody, it's really simple. You can really bunch up steps 1, 2, and 3 because you're looking for the same thing here. You're just looking for momentum and then identifying the trend. Step 4, you're just looking for an opposite candle. Step 5, you're looking for, or steps 1 through 4 are pretty much one step, but I broke it down into 4 steps. Step 5 is really simple because you're just looking for an opposite candle. And step 6, you're just making sure that it doesn't pull back too far. And that's pretty much it for the momentum pullback scalp. So if there was any confusion with this, guys, just let me know. I think everybody gets this strategy. It's pretty simple, especially because I've created the indicator for the levels. So you don't really have to look back and mark up the levels yourself because it pretty much does everything for you there. But for the high-low scalp V2, let's go over this criteria. It's very similar to the momentum pullback scalp. It's just you're looking for different entry points. So for this one right here, you're kind of looking for the same thing. You're looking for price to break structure. You're looking for the retracement, and then you're looking for the continuation. So for step one, you want to confirm the trend using the pivots. Same thing here. You want to make sure that price is above or below the pivots, and you want to make sure that the pivots are either angling up or angling down. And to confirm that, you just want to make sure that all the pivots are above the red pivot or all the pivots are below the red pivot. That's going to confirm the direction of of trend using the pivots. So you can see over here for step one, you just want to make sure all the pivots are above level 4, which is the red pivot, or below it. So with that said, this over here will confirm that price is in a bullish trend. That's going to be step one. For step two, you want to confirm that price breaks and closes past the nearest high low. This is what we just covered with Vimal. I know there's a little bit of confusion there sometimes, but you just want to make sure that you're looking at the most recent high low. So this one right here is the most recent high low. You can see price breaks past it. That's going to be step two. Step three, you want to confirm a fake out, just meaning that price pulls back below it. So price breaks past it, pulls back below it. That's going to be step three. Step four is once you get to step four, you can place your pending order right here for a buy. And as soon as price swings up, it's going to fill your order. Your TP stop loss is set to a fixed 300 pips. That's like basically the standard, but depending on the market volatility, like for example, today volatility was high, so 300 is perfect. But if it's kind of slower, you can just lower it to like maybe 20, 25. It just depends on the market conditions. So once you have all that set up there, you have the trend, you have the break and close past structure, you have the retracement fake out right here. Now you're just waiting for price to swing back up to fill your order and go to your TP. Right here, you can see price fills the order. It goes straight up, full TP right there. That's going to be the first example. Going over to the next example over here. Here's the new higher high. So at this point, you're pretty much going to ignore everything before this higher high, right? Because this is all new now. If you want me to delete this, I can delete this. There's nothing to look at before this anymore. Now you're looking at this new higher high. You're looking for the same thing again. You're confirming the upwards trend. You have the upwards trend here with regard to the pivots. You want to confirm price break and close past the structure again right here. Price breaks past the structure right here. You want to look for the fake out. Fake out happens right there, or it didn't close below it. You need to close below that line. There goes a fake out right there. Same thing again right here. You're going to set your pending order right there for a 300. When it swings back up, it's going to fill your order, and it's going to move to your TP. Order is now filled. Price goes up, straight to TP right there. That's the next example. Same thing again right here. You're now looking for anything after this higher high. You can see this candle right here breaks and closes past the higher high. Doesn't matter if it's a higher high or a higher low, just any high. You're looking for now for price to pull back. Price pulls back right here. Same thing. You put your pending order right there. You're going to let it fill and go to your TP. Price now filled. You're now in the position. Trade runs. This one goes for a bit longer than the others. But you can see right there, full TP again, right? At that point, same thing again right here. It's just a rinse and repeat process. You're not really doing anything different. It's the same thing. You already have the trends. You don't have to confirm step one anymore. You got step two right here. Price broke and closed past it. You have the fake out right here on the next candle. Price broke below it. Now you're looking again for price to fill it. And you're looking for the same thing to happen again. Again, this one runs for a while, but eventually it pushes up and hits TP. So it's pretty, it's pretty straightforward. Let me see the questions over here to see if there's anything else that needs to be covered or clarified. So let me scroll real quick. Yeah, CT said super easy. I misidentified it this morning because he was doing 3 other things at once. Yeah, no, it's the same thing. CT, it's all good. I know you're looking at multiple things because you're typically looking at a lot of different confluences, so it happens. But I'm glad it played through for you. The bias was just so strong, so like you can literally take any buy here and the buy would just play through. So I'm glad that it worked out for you. Ellen is asking, there used to be something with the pivots, cross, and gold bars. Haven't seen that in a while. There's not really anything that crosses for the gold bars, Alan. That's for the momentum scalp strategy. So that's a totally different strategy. We don't really apply that. I mean, you can apply it if you want, but it's not one of the main strategies. That's why you haven't seen it. But it comes up all the time. It's this, the indicator doesn't show the gold bars anymore because I take them off. If you have them set up like that with the gold bars there, you'll see the gold bars still do come up very often. So if you took that strategy that you were just referring to, I mean, they all would have hit here. So you can see all the gold bars here, right? Doesn't matter which one you took. If you took any of them, they all would have hit TP. 1030 split for that, full TP, 1030 split for that, full TP. But again, you need the indicators to see this. I know you plan on getting them, but once you have the indicators, you can turn them on and you can still apply the strategy. This is what Rashida was referring to today. She still applies the strategy. I don't apply it on the live session, but she still does it herself. She actually mentioned this today. And she said that she's been milking this because she's literally taking every entry that comes up and you can see that they all hit. So she took, I think, pretty much every entry that comes up for like the past, I think, 2 weeks or so. And you can see here that every time it comes up, it goes straight to TP, right? Like pretty much every time. The sell right there too, if you wanted to take the sell version of it, same thing there. So it doesn't necessarily not come up. You just don't see it because I don't have the indicator on the chart, but they've been coming up, and this is what Rashida's been applying. Yeah, so it's a good strategy. I mean, it's a good strategy. The only thing is I can't be applying like 10 strategies on the live session, right? Because I was doing that for a while and a lot of people were complaining because people were getting confused. So that's why I stick to 2 strategies. But but if you wanted to do it, I mean, it would still work perfectly fine. It's just in order for me to have some sort of order in live sessions, I just have to stick to 2 strategies. Like I'll cover other strategies, but I can't cover like 5 or 10 strategies at once because I used to do that for a while and I would end up missing a lot of entries and a lot of people would get confused. So I would have to stick to like 1 or 2 because if I start to do that, like I can do it easily because I know the strategies, right? So for me, it's easy. I'll just look at the charts. And I'm like, okay, that's a pivot scalp. That's a momentum scalp. That's an intraday scalp. There's a high low scalp V2. I can just enter those trades right away and I'll be good. But for the average person that isn't familiar with the strategies, a lot of confusion can happen, right? So yeah, in a bit, Alan, when you get the indicators, you can still apply the strategy. I think it still works perfectly fine. It's just not one that I personally apply myself. It's one of my favorites, but it does require a lot of attention when you're applying it because you have to wait for the actual momentum signal to provide entry. And you can't really time it. You have to like wait for the entry and you have to wait for the candle to close. So like if you were to apply this would have to be like one of the main strategies you'd be looking at, or you would jumble it with like something like a pivot scalp, an intraday scalp, or you just have this strategy and then maybe one more. So like this one and then maybe a high low scalp V2 because you can like look at those 2 at once. But it's kind of difficult because you have to base it off the momentum signal. And sometimes you'll get a momentum signal and it's pending. Like I'm pretty sure for these right here, these were probably pending. Like I think this was a pending signal, disappeared, pending signal, disappeared. And then this one finally closed. So you have to be waiting for it to actually close for you to make that entry. Let's see, Vimal's asking what's the name of the strategy? It's the momentum scalp. It's just momentum scalp. It's right here on my list. So it's really simple. All you're doing is that you're confirming. So like with the trend meter here, you would confirm the trend. Or the way that we did it is we had 3 separate charts. I mean, there's an easy way to do it, and there's a more accurate way. The more accurate way is to have 3 different charts open. It's not really necessary anymore because I created this indicator. So I'm always making adjustments to the indicator to make things easier. But what Rashid would do is you have 3 charts. You'd have the 1 minute, you'd have the, let me see what the criteria was again. I think it was 1, 5, and 10. Yeah. So you confirm the trend on the 1 minute, the 5 minute, and the 10 minute. Let me see, I have this settings here. I gotta make it so it doesn't sync the layout. Okay. So Yeah, basically you'll have the 1 minute, 5 minute, 10 minute. If you want to do it by hand, you can do it by hand, by all means. I would prefer to do it by hand, but again, I can't do this during the live session because there's so much stuff going on. Let me turn off some of these older indicators that we don't use anymore. Ichimoku. There's a ton of indicators here that we don't use at all. All right. So yeah, you would have 3 different charts open. Before we didn't have this gold bar. So like what you would have to do is you have to line it up. Like you'd look for a buy signal on, you'd look for basically all the signals to line up. You'd look for a green buy signal, green buy signal, green buy signal. But since I created this indicator, you don't need to do that anymore. You can technically do everything on one chart. And that's just me making it simpler for everybody else. So if you wanted to apply this on one chart, you just have one chart here, and then you would just change your setting. So for your trend meter down below, you would change this to, instead of chart, you'd have it to 1 minute, 5 minute, and 10 minute. So instead of having 3 different trend meters up, you now have the trend meter down below that shows you the trend on those 3 different time frames. And then instead of confirming momentum on all the time frames, all you would do now is you would just turn on the scalp option, and then you set your time frames to 5 and 10. So whenever you get a momentum signal that lines up, instead of it being green, it's going to be gold, because it'll confirm that you have the same momentum on the 1, 5, 10, and then same with the trend meter down below. So not super difficult, but I think the main problem with it was that it was a negative risk reward. So a lot of people were kind of complaining about that. The real thing here is like, people are going to complain about a lot of stuff, but you just have to understand like when not to take a trade, right? Like trading is simple, but it's not always going to be that simple. So you just have to like understand, where the red flags are. Like, for example, this strategy is super simple, but you also have to incorporate the red flags, which would just be like the areas of manipulation, right? Like near sessions, opening price, news price, if the candle prior to entry is too large, if price is ranging, like the obvious things that you should avoid. But a lot of people don't pay attention to this stuff here. So yeah, I mean, it's pretty simple. If you want to try it out, you can try it out. Vimal, the only problem is that it's a negative risk reward. So what I would recommend doing, if you want to make it a 1-to-1, is just trade off ATR. So like, for example, like right here, there's a buy signal. ATR was at like 12 at this time. I'd probably use I'll just round it up. So instead of going to, instead of using a 1030 right here, well, and it wouldn't matter. If you want to use a 1030, you could still use a 1030. But again, if you want to make it, as proper risk as possible, you can do a 1-to-1. ATR at this time was 13, so you just round it to 15. And then you go for 150 pips there. So, I mean, there's a lot of different ways to just make small adjustments to your TP stop loss to make it a better risk reward type strategy. Let me scroll up real quick, see if there's anything else. Just scroll up. I want to make sure I didn't miss any other questions here. Let me just get to Vimal's question, because he did have a question here regarding the High Low Scalp V2. So Vimal said, in the High Low Scalp V2, do we have a set number of bars for the fake out to return in the direction of the trade? Yeah, so you'd have to it would have to happen within 5 candles. So let me see if I can go back to the example that we had earlier. So for both breaking close and fake out, it would have to happen within 5 candles. So like, say, for example, right here, price broke past it right there. The fake out would have to happen within the first 5 candles. So price broke past it. It came down right here. This is the first candle. Second candle right here finally broke below. So this would meet criteria. The example that you used over here, or I mean, the example that you were talking about earlier, price never actually came back down for the fake out. So let me just show you real quick. Let's go over here. So you can see right here, price broke and closed past it right here. and then it would have to come back down within the first 5 candles. So like this is the first candle, 1, 2, 3, 4, 5. Once you get to that 5th candle right there, if it doesn't come back and break below for the fake out, then the criteria is not met and you move on to the next entry. So that would be the criteria for the high low scalp V2. Let me scroll up real quick. I want to make sure I'm not missing anything else. We got William here. William's asking, this is where my question comes in regarding placing the pending order on MT5. So I'll be ready moving forward with my pending orders. So yeah, your question was how to set a pending order, right, William? I think we answered your question during the live, but you know, if we want to go over it again, I guess we can review it. So basically you're asking, could you, yeah, okay. Gotcha. Okay, William. Yeah, so I think William during the live session, he asked basically, how do I set my order on FTMO? And let me just show you real quick. I mean, I wish I could drag my FTMO over here to my main screen, but the problem is that whenever I do that, it corrupts my MT4 because it's not a native platform on the Mac. And it gives me a whole lot of trouble because then I have to go and reinstall the whole program. Sometimes it doesn't reinstall properly, and then it kind of screws up my my MT4. So unfortunately, I can't drag it over here because I don't want to risk my account kind of getting screwed up for tomorrow's live session. But I'll just show you how I set my order. So basically, when you have an entry right here, so let me just go over here real quick. So this is an example of an entry that came up today. Let me just put my settings back to normal. So in order for me to set a pending order, it's not super difficult. Like what I'll do here is I'll just look at the setup right here, right? If you look at the setup here and you look at the setup on MT4, I mean, I wish I could show you the setup on MT4, but the candles are so far into the day that I can't pull them up. And the time on the chart is like, it doesn't line up with the actual time for me here. But basically what I'll do is once I have the setup right here, I'll look at my MT4 chart and I'll see how does this line up, right? I'm looking at wherever this high point is, and I'll just basically mark it up, like draw a line on my MT4, and I'll see where that level is for entry. And what I do from there is I just go to trading, which is an option on MT4. So I'll click on the chart, right click, go to trading, I'll go to new order, or I'll type in F9, like what William was saying, that's probably easier. I'm on a Mac, so I don't have F keys. So I'd have to use a shortcut. It's just easier for me to click. And then once I do that, you can put a pending order. So for example, if you're looking for a buy entry here, you're going to put a buy stop order, which is pending. You're just going to line up your entry with this price point here. Whatever the price point is on MT4, it's going to be slightly different. Like, let me see what the price is right now. So right now, the price currently is at 34,911 on MT4 right now. It's currently at 34,854. So if you were to do the math, let's see. So right now the price is 34,911. You're going to subtract it by MT4 if you want to do the math. You don't have to do the math, but if you just look at your chart, you can see that the price difference right here is about 57 points. It's not a big difference, but it's going to make a difference, of course. You know, 50 points is pretty substantial. It's about like 500 pips. So you have to like kind of understand what the difference is between price. But the problem here is that the price is always changing. So you're better off looking at your MT4 and kind of lining up the candle with your candle on MT4, because if you do the math, it's not going to be right because the spread is always changing and the bid and ask price is always changing. So it's never going to be like exactly at 50 points every single time. So yeah, so for this right here, I would just use the crosshair tool. Yeah, exactly what Delicia just said. Use a crosshair tool, look at the price of the candle, and then that's where you'll set your pending order. And that's exactly what I do too. So Delicia has it spot on. That's exactly what I do. Thanks for the tip there, because that's exactly what I do. Makes it so much easier. And it's going to be a little difficult initially, but once you do it a couple times, it's going to be super simple because you're just going to be looking at the current price. And I usually just round it. So for example, right here, it's at 34,919. I'll look at MT4, and if it's like close to like one of the numbers, I'll just round it to the closest number to get in as quick as possible. let me go back to Vimal's question. So that's it for that question right there. Vimal's question, his question with the high low scalp V2 was different. I understand that the fake out must happen within the 5 candles, but my question is, what if the fake out happens and continues away from the direction of trend and it takes many candles to return? So it's the same thing. It's the same thing, 5 candles. So 5 candles for the break, 5 candles for the fake out, and 5 candles for the correction or the fill, right? So let me see if there's an example here. It's pretty much the same thing. It's just like, so if you, let me see if I can find an example where it doesn't actually come back. Let's see. Yeah, because I know like that the example that you mentioned, that happened a lot during, okay, so I think this is a perfect example right here, actually. Yeah, this meets the criteria of what we were just referring to. Okay, so right here, you can see how price breaks past it. Okay, so this is a perfect example right here. So here's another setup. Price broke past it right here. Then it broke below on this candle right here, right? So this is kind of what you're referring to. Price broke past it, it broke below, and then now you're waiting 5 candles. Like you have 5 candle max for it to come back to fill the order. So here's the first candle or the first break. Now you're gonna count the candle after it. So there goes 1 candle, there goes 2 candles, there goes 3 candles, there goes 4 candles, and there's a 5th candle. So after the 5th candle here, if it hasn't came up and filled it, then this is pretty much disregarded, and then you look for the next opportunity. Yeah, so I don't want to like tell you guys to just not use this on the 5-minute, but for my examples on the 5-minute, I typically don't like have a set number because you know, if you look over here on the 5, these candles over here, since they're bigger candles, you'll see that it'll kind of run around for a bit and it'll push away, but eventually it'll come back and fill it. And it would still be a valid entry. So if you're trading on the 5-minute, it's a little different. I don't have any criteria for the max amount of candles because these like typically will run for a longer period of time. But for the 1-minute, yeah, everything has to happen within the 5-minute max. The reason why you want to do that is because you don't want to be having your pending order just waiting there. And then, you know, at some point, like say, for example, you have that pending order there, right? Sometimes this is what will happen. Price will go up, it'll come down, and then you'll forget about it. And this happens to me sometimes too. I'll forget about it. It'll come up and fill it, and then come right back down. So it's a lot easier to just cancel it than to kind of hope for it to just fill at some point. A lot of times it does actually fill and it goes through. But again, that goes back to the 5-minute here. So like, for example, if you had an entry here that was waiting, eventually it would come back and fill, and then it would play through. But you know, you don't want to take that risk on the 1-minute because price is going back and forth so often. Yeah, no problem, Vimal. Glad I could clear that up for you. And let me see if there's anything else here that I am missing. Let me scroll up real quick. Let's see. So Alan is asking, what is the blue bar on the trend meter? So for the trend meter, I think I answered this question, but I'll just answer it again just to reiterate what I was mentioning earlier. So for the trend meter down below, guys, when it's green, this means that the trend is bullish. When it's red, it means it's bearish. And when it's blue, it means it's neutral or price is ranging. You can kind of see over here, like when it's green, price is kind of climbing up a bit. When it's red, price is climbing down. And then when it's blue, you can see that price is just going sideways. So you can use them separate. Like the reason why I created these 2 indicators is because the trend meter changes a lot faster than the pivots. But if you line this up with the pivots, you have a double confluence with regard to trend. It usually lines up pretty well. So for example, here you can see how price is pretty bullish for the day. And you can see the pivots are all angling up and they're kind of spread out. So when you have those 2 confluences, they typically help out each other a lot. So I wouldn't necessarily use the trend meter alone. I would probably use it with the pivots, and that's typically how I use it myself, because it gives you a better confluence and a better understanding as to like how the trend is and how strong the trend is. But yeah, that's pretty much what it means for that there. Let me see if there's anything else here that I'm missing. Scrolling down lower. Alan is asking, can you show how to make the zones? Perfect. Yeah, I'll show you. Super simple. You guys will see that I typically draw the zones here on the 1-minute. I have three separate charts that I usually use during the live session. I have this chart here, which is a clean chart. This usually just has the zones, market structure, and opening price. For this chart, I have liquidity pretty much marked up. For this chart, I just use this mainly for the High Low Scalp V2. And for this chart over here, this is our main chart for the momentum pullback scalp. So in order to draw the zones over here, what I typically use is I just use the rectangle tool. So the indicator that I use to identify the zones is the high low indicator, the Kodi Kai high low indicator. I'll just replay this back to like 8 o'clock so that we can have some zones here. So mainly all I use is the high low indicator. If you have the default settings on, it's completely fine. You can have the default settings, but in order for you to clean it up so you don't have like all of these high lows on the chart, I typically have the higher high and lower lows only. I have that lined up right there. I click OK. And at this point, it helps you identify what's important and what's not so important. So with that said, basically the way that I draw my zones is I'll use a rectangle tool, which is right here. So if you go to the toolbar on the left-hand side, you'll go to geometric shapes. You'll go to rectangle. And if you want to have perfect zones, just click on the magnet tool here. And what you'll do is you'll just click on the top part of the higher high. And I pretty much just draw in from where the wick is. So I go from the high point, basically the high of the candle, and I fill in the wick. And then if you want to do the same thing here, you go down to the lower low, do the same thing, go to the rectangle tool, make sure you have the magnet logged on. Click on the lower low right there. I just fill in the wick right there. And then you just want to keep drawing more zones around where these higher highs are. You don't want to have too many zones. So you probably don't want to draw all of these right here. I mean, you can if you really want to. Or what you can do initially is you can just draw a bunch of them. And then you can kind of see where the patterns are kind of moving from. So you can see over here, this is a range. Or you can just leave them all up if you want. It's just, how clean you want the chart to be. As you do this more often, you're going to start to be able to see these patterns a lot easier. Like, for example, for me, I can kind of tell where the ranges are happening. So I don't draw all of the zones. Like, for example, here, you can see our price pushed up. I got a range right here. Price pushes up again, another range, pushes up again, another range. Either way, it's going to give you a good idea as to like where to look. But, you could mark up any other zone too. So, for example, if you didn't want to mark up this one, you could have marked up this one, right? And it still would have given you pretty much the same range right there. It probably would have given you a better range, actually, from this area right here. But that's pretty much how you do it. It's pretty simple. You just have the high-low indicator, and then I have it set to the higher highs and lower lows only, and then I draw rectangles around those areas. The default settings for the rectangles are typically going to be set to where they're not extended. So if you have it set like that, it'll draw like certain zone, like you can draw your own rectangle. But if you want it to be extended, like for example here, if you just want to have it to the right, you have it set to extend right, and then it'll give you some cleaner zones. But for me personally, I like having them both ways. So instead of having, extend right, I just have them set both ways. So extend right and extend left, and they pretty much just extend across the entire screen. And that's pretty much it. Yes, that is correct, Ellen. So pretty much higher highs and lower lows. And then I go from the top end to the lower end. So if you're going for a higher high, I would go from the top end, because obviously it's a high, you go from the top end to the bottom part of the wick. And then if you're doing a low, you go from the bottom end to the body of the wick, or to the body of the candle. And that's pretty much how you would draw it. Yeah, it's super easy, Alan. Like, it looks kind of difficult when I do it because I do it so quickly. But once you do it every once in a while, like you do it, like it's all with repetition. The more and more you do it, the easier and easier it'll be to apply. I've been doing this every day for like 5 years now for you guys on the live session. So for me, I don't even have to think about it. I could kind of just identify where where the zone should be. And again, it just comes with repetition. It's all about practice and repetition, because you're doing the same thing over and over again, where it just becomes a routine. and it becomes easier for you to identify, where the proper zone should be. But it's super simple because the indicator does everything for you. You just do everything manually by drawing up the actual zones. All right, so that's it for that question right there. Let me scroll down a little further. Let's see, next question from Nick. Nick's asking for 150K account, what lot size would you recommend? So I use a 200 lot for a 200K account. On my 100K account, I use a 100 lot. For a 150K account, the max lot that you should use for these scalp entries is going to be 150 lots. That's going to be the max. You don't have to use 150K or 150 lots because you can use half of that because it just depends on how fast you want to pass, right? For me, I'm confident with my trades and I can use my max lot size because I already know that I'm taking quality entries. For you, it just kind of depends. If you feel confident with the entries, then your max lot size should be 150. If you want to take it slower and have less stress, like not have to risk blowing your account if you make any mistakes, I would definitely use maybe half of that. So you probably want to use between a 75 lot and a 150 lot. 150 is a max end. 75 is going to be half of that. So it's going to be, it's going to take you twice as long to pass, but you're not going to blow your account. So the thing with FTMO is that there's no longer a deadline, right? There's no trading period. So you can take, a month to pass. You can take 2 months to pass. You can take a whole year to pass if you want. So if you want to take a lower lot size, feel free. 150 would be the highest lot size for you though. Because like for me, I'm capped at 200. I'm not really capped, but I can go higher than a 200 lot size, but I keep it at 200 so that I'm risking about 1.5 to 2% per trade, or 1.5 to 2.5 per trade, because I'm pretty confident with my trades, right? Because I'm only taking quality entries. So for me, if I'm risking 2.5%, I'm perfectly fine with that risk to make a profit, because usually I'm not going to lose a trade. Or if I don't feel comfortable, I usually pull out for a partial profit to begin with. So it's usually going to work out for me. But for you, max lot size I'd recommend is 150 lots. Anything below that's fine. All right. Question from Alan. Alan's asking, on a 100K FTMO, you need what profit to pass? You need 10% to pass the challenge and then 5% to pass the verification. So 10% of 100K is going to be 10,000. You need 10,000 to pass the challenge, and then you need 5,000, which is 5% to pass the verification. So that's how much profit you would need. So it becomes a numbers game, right? That's really what it is. It's just a numbers game. Like for example, if you're going for these high low scalp V2s only, and you're going for about a 1.5 to 2.5% risk per trade, how many wins do you need to have to get funded, right? You need about 5 wins. You have 5 good trading days, and you would have reached 10% at that point. So it just becomes a numbers game, depending on like how much risk you want to take, how much risk you don't want to take. It's just going to take you longer to pass, but as long as you're consistent, the percentages will keep adding up day over day. So it just takes some time for you to get to that point. Yeah, Nick says sounds good right now. Since he's still learning, he's been at 50 just because he didn't know. Once he's more confident with everything and know the strategies like the back of his head, he'll be more aggressive. Yeah, exactly. So you don't have to be aggressive, guys. For a lot of these challenges, there's no time limit, so you can take your time with it. Take smaller lot sizes. You're going to get less profit. It's going to take you longer to pass, but at least you'll pass, right? I would rather have you guys pass and pass in a longer period of time rather than, either blow your account or be in a super deep hole right out the gate. Yeah, I don't think there's a time limit on Apex either. So you should be fine. If you're wondering about lot sizes for Apex, you should probably talk to Maddie, because I don't use Apex. But for FTMO, it would be pretty much what I mentioned, because I mainly trade on FTMO, and then I just have the other accounts as extras, but I don't use Apex. I think for Apex, it'd be like 15 max. I know in Tradeovate, it was like a max contract size of 15. And I think Maddie uses like 9 or 5. So he uses a lot less. So you can see how Maddie's profits over here. Like for Maddie's profits, he has a 150K account on Apex. And you can see his account over here. He makes like 210. So if I'm making a 2,000 on my account, he's only risking like, I think 5 contracts. So he's doing like a really small contract size, but he has a lot of accounts. So he's not really risking as much. All right, let me scroll up. Let's see. Scrolling down over here. All right, Vimal said a trading question, not a strategy-based question. For a $1,000 profit you make on FTMO, how much to risk for the momentum pullback scalp and for the high low scalp V2? They have different RRs. So for me, I only take quality entries, so I take the same risk on both. So I'm still risking about a 2.5% on the momentum pullback scalp as well. So I still have it's kind of hard to, so let me see. Because I don't change my lot size. I do change my TP stop loss, but I don't change my lot size. So let me do it real quick. Okay, so I'm risking about 5,000. I'll try to do the math real quick. My math sucks, so I'll try to, let's see. So I have 200,000. Let me do it again. So 200,000 divided by 5,000. No, that's not right. 5,000 divided by 200,000. Okay, yeah. So I'm still risking the same amount. I'm all for the same. I'm risking about 2.5%. Because it's just too hard for me to change. Like, there's so much stuff to change. Like, if I have to change my lot size and then change my TP stop loss for that specific entry, these entries come up super quickly, and usually I have to choose between the I gotta choose between the momentum pullback scalp or the high low scalp V2, because they're like the same strategy, right? They're very similar. They come up around the same time. So like, for example, today I didn't take any of the high low scalp V2s because I decided to take the momentum pullback scalps, even though they did line up with each other. There's like 2 entries that came up right after each other, and they came up at the same time. So for me, I had to choose between the two. My risk isn't necessarily, I wouldn't recommend it to everybody, right? For me personally, I trust my strategies. I trust that I'm able to get in and out of these positions if I don't feel comfortable or if I need to make adjustments. So I never change my lot size. I'll change my TP stop loss, but I won't change my lot size. So the R&R is a little different. I mean, it's different for the TP, of course, because you're going for 100 pips here and you're going 300 pips for the high low scalp V2, but I'm still risking about 2.5% for both trades. Because the main thing that changes would be the TP stop loss, but my lot size usually stays about the same. I might even be risking more actually. Like for the high low scalp V2, I'm actually risking more. So I'm risking about 6,000. I'm risking about 3%. And that's usually fine with me, because if I ever lose a trade, I'm usually done for the day, right? I don't usually lose more than 1 trade a day. If I lose 1 trade, I'm usually like, okay, I'm done for the day. So I'll risk about 3%. So it doesn't really change for me. It's between 2.5 and 3. But then again, if I ever lose a trade, I'm usually done. I'll be down 3% for that day, but I'll probably make it back the next day. So the RR is typically around the same range for both. It just depends on the person. But like, yeah, if someone was to be trading, like for example, like Nick was asking about his lot size for 150K account, he'd be risking, let me see, so 150, or I told him 75 lots. Okay, so if Nick was to risk, use a 75 lot, and then he was taking momentum pullback scalp, we'll do 1,875 divided by 150K. He's only risking 1.2%, so he's risking a lot less. So it just depends on the person. For me, I'm pretty disciplined about, like, if I lose a trade, I'm done for the day. So I'm able to risk more because I'm able to cut it out. pretty quickly if necessary. But yeah, I mean, that's pretty much my risk. My risk per trade is about 2.5 to 3%. And it's usually between those two strategies. All right, so let's see if there's any other questions here. So I think that might be all the questions. So all right, guys, if you guys have any other questions, feel free to put them in the chat. If I missed any of your questions, just go ahead and put your question back into the chat. But I think I did cover a majority of the questions here. We've been on this mentoring session for a little bit over an hour, but I'm willing to stay on if you guys have any other questions. I just don't have anything else to cover for the day. Pretty much cover the momentum pullback scalp and the high low scalp V2. Those are the two main strategies. I think these strategies are going to be a staple for the rest of the year, guys, for the rest of the year and probably into next year as well. The only thing that we might want to be looking at is if the markets gets stuck in a range. I don't think that's going to be the case because we have a lot of stuff happening next year. Obviously, there's a lot of big factors to basically take into consideration for next year. We have the presidential election, we have the war in the Middle East, we have the Russia war, we have a recession it's looming above us. We have inflation, we have increased interest rates, we have a lot of stuff going on. So I think as we go into the next year, I think volatility will pick back up. I don't really see the market ranging because there's just too much going on to cause the market to move. So I think for the most part, we're going to stick to these strategies. We just have to stay disciplined. Like, for example, today, there was every strategy that came up and they all hit. Versus, the past 2 weeks, there hasn't been too many entries. So I think we're going to stick to these strategies here. So I'd recommend to just continue mastering and fine tuning these strategies. I haven't made an official video for the high low scalp V2 because I wasn't sure if I was going to change the criteria, but I think as of now, the criteria is here to stay. So I'll probably make an official video for that, within the next couple of weeks. I just want to see how the market goes. I'll have to make some adjustments because I think the main thing that we have to look at would be the ATR. The ATR is too low. So I don't think we can use a set 300 every single time. I might have to change that criteria to cater to like whatever the volatility is for that specific time period, which would probably be rounded up to the higher ATR. So for example, here, if the ATR is 22, we'd probably use a 25. If the ATR is 25, we'll use a 30, etc. But I think that's about it, guys. So if there's any other questions, feel free to reach out. I think I answered everybody's questions and I don't see anything else popping up in the chat right now. So I think that's about it. So, all right, guys, if you guys have any questions, feel free to reach out. Otherwise, I think this was a pretty good session. You guys had some pretty good questions. So I'm glad that you guys had questions to ask. We went deeper and deeper into these strategies, and I'm glad that we were able to clear up a lot of stuff that was a little confusing. So maybe something that I could probably factor into the next video that I make for the next strategy, the high low scalp V2. So, all right, guys, I think that's about it. I'll see you guys back here tomorrow for the next live session. If you guys have any questions, feel free to reach out. Otherwise, we'll wrap this up for the day.